All right, Nicole, let's get started.
Sounds good.
Thanks everyone for coming to our Q2 CPC report webinar. I am super excited to have Nicole Perrin here again from eMarketer, who covers the advertising industry and is a frequent guest on Pacvue's webinar. We're going to talk about Amazon ad growth during a very uncertain market. It's been 2020. I feel like I can't wait for 2020 to be over, but it just keeps going. So the fun just keeps going.
It is August now somehow.
I know. Can it be 2021? All right, it's halfway over. So today we're going to talk about so just a quick takeaways from Amazon earnings, e-commerce trends, Q2. We're going to go through the CPC report that we put out, and we're going to do a Q&A. So just as a little reminder, please enter your questions in the Q&A. Nicole and I will try our best to answer it, or if we can't, then we will get back to you. So without further ado, let's take off with our Q2 earnings and takeaways. So Amazon reported earnings last week, and it was the biggest thing that stuck out to me was just this crazy profit that Amazon had. They had earnings per share of $10.30 on an expected $1.51, and that was just, I think we were all super surprised by that. But today we're kind of talking about advertising, and the other bucket is what Amazon reports advertising into. They don't really break it out, but advertising was up 41% for Q2. And they really didn't talk a whole lot about advertising in this earnings report at all, but we know that advertising is a big driver of profit for them in addition to AWS. They had a few other things, like they had a big slowdown in marketing. They actually were trying to throttle demands. Imagine that this quarter, because they had so much. But back to advertising, this quarter there was, innovation was mostly in sponsored brand, a focus on video. Something to think about looking forward is the July Facebook boycott and the continued traffic surge. So how is that going to continue to impact Amazon advertising? And then the big takeaway that I had on earnings was just how capacity constrained Amazon is. Despite them, they had $9 billion in capital expenditure this quarter, and a lot of that was capacity build out, but they're still capacity constrained, which just shows what a huge amount of traffic they're getting. And then on the right hand side here with our graph is, so the one above is Amazon earnings, and then that aligns well with kind of our advertising growth that we saw, which was kind of a lower in April, May, back to normal levels in June. Anything else you want to add to earnings result, Nicole, that you want to?
No, I would just add that it was a little bit better than we expected with the growth in that other category, but I'll talk more about that when we do get into my slides. In terms of the Facebook boycott, I do think that there is a good chance for that to have some positive impact on Amazon advertising. We don't think that that boycott or pause in spending for July had a material effect on Facebook's ad revenues, but a lot of the brands that were announcing their participation were in the CPG category, including a lot of brands that we think probably don't get that great ROI from ads on Facebook, as opposed to the ROI that they probably get from advertising on Amazon.
Yeah, good point. All right, so this is a McKinsey article that came out, and really the point on this slide is that there's a lot of new customers coming into e-commerce because of COVID, and that customer behavior is shifting. So 15% tried grocery delivery for the first time, and then of those, 40% of them intend to continue getting their groceries delivered. And so just with a lot of new consumers to e-commerce and shifting behavior from an Amazon search perspective, we've really been encouraging clients to bid on generic category keywords as people are coming in. They're likely to shift their behavior. There's a lot of out of stock. So we see the growth of category keywords and really a big focus on that more than normal. Okay, so first we're going to kick off with Nicole, and she's going to take us through her slides, and I'm going to be driving, so I'm going to try to get the time right, but if I don't, then
I'll let you know. Yeah, so I'm going to present some of eMarketer's most recent forecasts. I'm going to start out with some on ad spending and then move into some that do touch on e-commerce sales. So just to give you a little bit of background, we had previously published a set of full year estimates the first week of March. I'm based in Chicago. Our home office is based in New York City. We published these estimates about a week before our own offices closed, and then we saw these kind of rolling lockdowns come across the country, so we knew we were going to need to do a revision sooner than we might otherwise have. We had previously been predicting digital ad spending in the US would grow by 17% this year. We are now predicting it will grow by just 1.7%. That is by far the lowest growth rate that we've seen in digital ad spending since 2009, which was the year that it fell during the Great Recession. So, aside from recessionary times, this is pretty unprecedented, and we expect it to be kind of just slightly positive. Now, of course, that compares to significant declines in traditional media, so this is still looking pretty good. Okay, moving on to our search numbers. We also revised this one downward and even more significantly. We're now projecting that search advertising spending will actually fall this year by more than $1 billion. So what do I mean by search? Primarily keyword targeted ads. So a lot of Amazon ads fall in this category. And of course, Google's search business is the main player in this category. And one of the reasons that we do expect search ad spending to fall as a whole has to do with certain categories that Google in particular is really heavily exposed to, which is travel. Companies like Expedia and Booking.com in a normal year spend billions of dollars with Google, and they're just not doing that this year. So search is falling, even though you might typically think in a recession we would turn to these really ROI-centric formats, lower funnel formats like search. So Amazon is now going to be gaining share of the search market faster than we thought. So we have been predicting for years that Google's share of this market is declining as Amazon's rises. Melissa talked a few minutes ago about more and more people trying digital grocery shopping and other digital behaviors. A big part of what we're seeing as a theme in the pandemic and recession is that it's accelerating a lot of existing trends. So there's been a trend a little bit away from Google toward Amazon in terms of search, and that trend is really dramatically accelerating this year. Google's going to lose almost 3 points of share as Amazon gains almost 4 points of share. We weren't expecting to see that dramatic of a shift before until after 2022. So this is a big acceleration of Amazon's market share here. You can see they've been a pretty solid second place for a few years, and they're continuing to put more distance between themselves and Microsoft, which obviously owns Bing. Okay. So Amazon specifically, we did also revise that one down, but by much less, by less than $1 billion. And we're still predicting faster growth at Amazon than at almost any other digital ad seller. I think the only company we're projecting to grow faster is Roku, and that's from a much tinier base. Now, that said, we just talked about Amazon's fantastic Q2 results. They did not talk much about that other or advertising category on the call, but it did grow by 41%, which I know is more than we had been modeling for Q2. So when we do revise these figures again in a little bit more than a month from now, I expect we're going to be looking pretty strongly at revising Amazon upward. The one thing about that is that we also think a lot of the reason that Q2 held up so well had to do with the ongoing stimulus, including the bonus unemployment payments, which are pretty much over, and the stimulus is not going to be continuing in the same form. So we do think there's a danger that depending on that stimulus and how the recession continues to go, that Q3 could end up being a little bit worse than Q2, even though that wasn't what we originally expected. So where does that put Amazon in terms of its place within the duopoly? So earlier I was showing a chart that broke down share just for search. This is for overall digital advertising revenues. Amazon continues to gain share here. They've climbed over the past few years, into third place, and they're now going to get almost 10% of net US digital ad revenues. Obviously, Google and Facebook are still substantially larger, but it's definitely encroaching on that and also, taking some share from that long tail other category because Amazon does continue to perform so well. Okay, now moving on to some sales figures. So why is Amazon advertising doing so well? Obviously, in part because sales on the platform also continue to do well. We're predicting a record year for e-commerce sales growth in the US. As far back as we have estimated e-commerce growth, we've never estimated a rate quite as high as 18%. So driving so much shopping from brick and mortar to digital out of necessity has really led to record growth here. Now you can see it's not strong enough growth to add up to positive retail sales growth overall. We're still predicting that retail sales will decline by more than 10% this year. Brick and mortar will obviously do even worse than that. But again, this acceleration of a channel shift from brick and mortar to e-commerce is leading to really, it's just fantastic growth in e-commerce this year. And who is benefiting? Oh, and so that entails, no, go on, my fault. So that entails an increase in overall sales. We're going to shoot past $700 billion in retail e-commerce sales in the US this year. We're also going to grow the number of digital buyers. Obviously, that's growing more slowly because almost everyone who has the potential to be a digital buyer already is. We define that as anyone who buys something online at least once per calendar year. So since that bar is pretty low, it doesn't have that much room to grow. But the folks who do buy online are going to be spending really quite a lot more on average, going from just over $3,000 a year to almost $3,500 a year for almost 14% growth. So we're seeing, just a huge amount of everyone's overall spending happening online, much more than in past years, and shifting everything toward digital channels. Okay. And a lot of that shopping is happening at Amazon. If you were watching the congressional antitrust hearings last week, you may have seen a version of this slide flash across your screen because they were referencing these figures. Amazon will get 38% of retail e-commerce sales in the US this year, with Walmart in second place with just under 6% of the market. So Amazon is definitely one of the main beneficiaries of the digital transformation necessitated by the COVID pandemic. But there's some other players that will also definitely benefit, including Walmart.
Awesome. Okay. So next we're going to talk about our report. We're gonna go dive into Amazon search numbers. Every quarter we release this report, so you can go to this URL and get it yourself. But I'm going to give you the highlights here. So, kind of in general, CPC's drops in April, May due to out of stocks and delayed shipments. If brands had the inventory, they were spending and getting more budget due to the surge online, but so many brands, especially CPG and essential categories, had a big drop to their budgets when they ran out of stock. But we did see that rebound in June. I have a slide in here and we'll look at, we did a study of the CPG essentials category and they just had record sales weeks as a result of COVID, and they surpassed Cyber 5 with this huge peak. So we'll look at that in a second. Lots of budget uncertainties, which I think we still have right now. And then kind of the interesting thing from an ad type perspective, sponsored brand ROAS overtook sponsored product ROAS for the first time. So a quick quiz, enter into the chat or the Q&A channel. What do you think was the #1 keyword on Amazon during Q2? I think there's probably, mask, anyone else? Face mask? Outdoor pools, hand sanitizer, Clorox wipes, bidet. Okay. Yeah. So what's hot right now is protection, face masks. We're having, summer camps, if people are lucky enough to have summer camps, and people are going back to school, and everyone is wearing a face mask. And it has been the #1 search term this May and June, and just all over the place this, first half of the year, which is very different than other years. So I just wanted to point out kind of a clear early winner. This is, I think it's a company licensing Crayola face mask, but they started out direct to consumer on Facebook ads, moved to Amazon recently with a pre-release of July 31st, which I guess has already passed. So now you can actually buy these things, which is this kids face mask. I'm actually surprised that there isn't more bundling of face masks. I was talking to an antivirus protection software company the other day, and I was saying, why don't you bundle that with a free face mask? It's like free billboard across your face to promote your brand. So anyway, I don't know, maybe my prediction is wrong, but that's what I would do if I were a brand these days, is be printing a lot of branded face masks. Cheaper than Amazon search. No, just kidding. So what's new in Q2? A lot of the point of this, a lot of launches around sponsor brand, and then also sponsor display. Amazon has really struggled with the adoption of this ad unit. So they've increased some functionality. So they implemented product targeting, and they also streamlined the process to create the sponsor display ad type. It was a little bit more manual, but now you can it's more templated, and we think that probably will drive potentially more adoption of it. So, and that's what is new for ad types this quarter. And then in terms of the numbers, so, cost per clicks were down, ROAS was up. Click-through rates, Q2 brought the big gap in click-through rate for sponsored product ads and sponsored brand ads to a bare minimum. And then conversion rates were also down quarter over quarter, but sponsored brands was higher than sponsored product for the second quarter in a row. So in a nutshell, that's kind of what we saw. And of course, the report, you can, usually it's kind of easier to see all these numbers on your computer screen. So we'll pass this around after the recording. Like I said, we did a study of essential brands in the CPG category and saw that they had just record sales weeks that surpassed previous highs from Cyber 5, and kind of have maintained that level of that Cyber 5 peak. So pretty insane growth, especially within that CPG category. And I'll start looking at some of these kind of variables broken down. So cost per clicks decline. There were bigger drops in April and May, especially in sponsored brand, with a rebound in June. And what we saw with a lot of our clients was that just out of stock. So people can't advertise what they don't have. And either it was April or May, but there was just a big pullback due to just lack of inventory, maybe even budget cycle, where people went back and got more, ad budgets because they saw this big surge of demand. And then we saw it kind of level off in June for cost per click. In terms of ROAS, so like I said, this is the first time that sponsored brand ROAS overtook sponsored product for the first time in Q2. April and May, we saw those big drops, or we saw increases, I'm sorry, opposite, and then a drop in June. Sponsored brand ads are the only ones that have positive year-over-year growth in ROAS in both Q1 and Q2. And it's, like I said, this is, I'd be interested to hear from the audience if they also are looking at this shift mix. Most people have been really investing in sponsored product, but now predict a little bit more mix into sponsored brands too. So cost per acquisition. So in total, difference between CPA for sponsored product ads and sponsored brand ads is much smaller than in 2020 compared to 2019, but looking at a monthly level, CPA for both sponsored product ads and sponsored brand ads have been steadily increasing through the whole of Q2. And then in terms of conversion, the conversion rate for sponsored brand ads is higher than for sponsored product ads for the second consecutive quarter. The difference between the two increased this quarter despite the fact that both the sponsored product ads and sponsored brand ads decreased by 11% and 2% respectively. So we see sponsored brand ads still maintain leadership. And then lastly, a little bit about brand spending. So, you know, like we saw at the beginning, or said at the beginning, sponsored brand ad spending was way up 78% year over year. You know, brands are still spending more, and we expect this to grow. Although, Nicole, maybe you know, Q3 remains a little bit uncertain, that's for sure, but just a ton of increased traffic and demand, and steadily increasing in demand. So again, please add in your Q&A, and I was prepared for this, so I've already prepared some questions for Nicole and I to be answering. Why don't you start, Nicole, with, I'll answer some of these around kind of the Prime Day impact and impact to H2, but why don't you kick it off with, what do you think is going to happen in Q3?
Yeah, so let me start off talking just a little bit more about kind of what we were modeling in late May, early June when we made this forecast, and maybe how that might have changed. So what we assumed is that the bottom of the ad market occurred in early Q2, late March through April. We assume that that was the bottom of the market, and that's based on both things that we've heard from major digital ad sellers reporting in April, like Facebook and Google, their Q1 reports that they made at that time, as well as conversations that I've had with folks in different parts of the digital ad ecosystem about what kind of revenues or spending they've seen. And what we've heard is that May started to come back slowly. June spending growth accelerated a little bit. July accelerated a little bit again. And so we've been expecting kind of like a long U-shaped recovery, and that by early next year, we would be, you know, in growth again, especially because the comparatives would be a little bit low because of the recession. We didn't expect necessarily all industries to come back at the same rate. We don't expect travel spending to come back to anything like the way it was until well after the beginning of next year. But in general, that's what we've been expecting. Now, what we've heard last week from not just Amazon, but also from Google and Facebook, which are obviously an important part of the foundation of our digital ad spending forecast, was way better performance than we expected in Q2. So we expected Facebook to be roughly flat in Q2. They grew ad revenues by about 10%. We expected different lines of Google's business to perform differently. We expected their search and their network member business to decline pretty dramatically. They did decline, but not as much as we thought. We expected YouTube to grow. It grew faster than we thought. So what we've seen from the results in Q2 is that they're better than we thought, which, you know, leads us to think we're probably going to be revising some of these figures upward when we do make another revision. Except, you know, that assumption that we'll just kind of have this steady acceleration through the end of the year, it doesn't necessarily take into account the fact that the stimulus has lessened, is not coming back the way that, you know, it had been in the CARES Act earlier this year. And all of the research that we've looked at really does suggest that that had a big effect on aggregate consumer spending. So if people still remain unemployed in Q3 and aren't getting the same type of stimulus benefit, we think it's very possible that consumer spending will falter potentially more again in Q3, and that we could see a little bit more rocky of a recovery and some complications to that U shape of the recovery. But it's a little bit too early to say at this point, but those are the things that we're watching in terms of what comes in Q3 and also Q4.
Yeah, that's uncertain is very much the word. Let's talk a little bit. What I'll talk about is kind of Prime Day impact and impact to advertising H2. That's a lot of the questions that we're talking to our clients about and advising them on. But for Prime Day, first, let's look into the big elephant in the room, which is around capacity. So first about Prime Day, Amazon has said that it will move Prime Day into Q4. We hear that that's early October 5th, 6th kind of time frame. which is not surprising, which is, you know, the ability to pull forward demand into October. Probably the fact that Amazon had no capacity to be able to have a July Prime Day at all. But, you know, moving Prime Day into October probably means that it's the start of the holiday season, beginning of October, and then maybe having a little bit, if I'm Amazon, I'm trying to have more of a smooth line versus all these peaks and valleys, to kind of smooth out supply. But on the earnings call, what was concerning to me most was just this idea or concept that Amazon is still out of space despite all the, you know, warehouses that they're launching. They just announced new restrictions on warehouse space for third-party sellers that go into effect on August 16th. You know, if you think about what this means for brands too, as they talk about having limited capacity, it's probably that brands need to be thinking about SKU rationalization, backup plans to drop ship or use micro fulfillment. I mean, not use FBA as their backup plan, and really using mid-March as like this benchmark for what happened and how you can plan going forward. So that's the first thing. As we think about Prime Day and this October 5th, 6th timeframe, you know, one of the things that we're talking to our clients about is what was your budget Q4 before COVID? What is it now, and is it sufficient based on the predicted growth of online? We saw a lot of advertisers kind of move their TV ad dollars or move maybe their Facebook ad dollars into Amazon spending because it was, you know, where the traffic was. So where are brands at in that, you know, planning of their budget to make sure that they have enough for this Q4 timeframe? And then also really thinking about winning with those hero SKUs or ASINs, given the capacity constraints. Maybe assume that tier 2 and tier 3 ASINs are at risk of being ordered and deprioritized. Maybe now is a good time to look at advertising those or selling through those. But again, like this uncertain time frame means prioritizing what really moves the needle for these companies, which is the hero SKUs, making sure there's enough ad budget to be sufficient, which is more than pre-COVID timeframe as they plan. So those are some of the things that we're thinking about. You know, it's going to be a very, the COVID impact is getting worse, not better, it seems. Like even here in Seattle, which is, you know, pretty aggressive in terms of what they're doing, their policies. You know, we're starting with distance learning at school, no school, you know, in the classroom. We're doing a lot of things in our state. So, you know, more and more of these sales are moving online. It's kind of funny. There's a Jason Goldberg article where he talked about brick and mortar stores. All they wanted was a lot of traffic and to keep people in the stores as long as possible. And COVID has made that to be the opposite. I think Target talked about how for Thanksgiving, they're not going to have any of the stores open because who wants a bunch of people rushing to the stores? So you can predict that all of this is moving online. So just really predicting an aggressive Q4 holiday season with pricing, kind of a 3-month holiday season, and that kind of stuff. So it's going to be interesting.
Yeah, and I would just also echo there that I talked about how we might revise our ad spending estimates. I didn't mention the e-commerce sales side of things, which I am a little bit less involved in, but I do know that our assumptions there were similarly based on kind of a smooth transition. Yeah, I hate to say out of the pandemic, but on our way out of the pandemic. And, you know, this idea that there wouldn't be second waves or resurgences or additional lockdowns. And where I think we're right in that it's not really a second wave if the first wave just never ended, but we are seeing potentially like more backing away from brick and mortar retail. So I'd say on the sales side as well, there's possibility for e-commerce to do even better and brick and mortar to do even worse than we expected.
Mm-hmm. So one of the questions is, on Amazon, do we think there's more shift away from search and into DSP post-COVID? That's a really great question. One of the things, not to put a selfish plug into Pacvue, but one of the things I'm really excited about is the fact that we finally have a DSP API and integrating DSP into our tool. And the very first way to assess what you should be doing is be able to get all the reporting in one place to see how much money you're spending, how it's performing, and to be able to be more fluid with shifting your dollars around. And so finally, we're going to actually have one place to see all of that, which is kind of the first step in making these decisions. And I think that being fluid to understand, is search getting too expensive? One of the things that we definitely saw in March was that when people went out of stock, it was a huge opportunity to bid cheaply on, CPCs of these huge, keywords. So in that respect, I would say like do search, because you're going to have this, be opportunistic with the ability to do search, especially if your competitor is out of stock. Being able to monitor your inventory levels, your competitors' inventory levels, to see, is it a great time for you to bid on search and move money from DSP there? So I think that the key is going to be visibility to all this data to make those decisions and trade-offs. So I think that we're going to be seeing a lot of testing. If you're smart, you're being opportunistic to see what's going to move the needle the most for you. But that is a really good question. Let's see, what purchasing pattern changes does your data show will be lasting, and what will return to brick and mortar? From Eric Heller to Nicole. That's the Nicole question.
Yeah, so I can't really fully answer that question yet. We do still think that it's early to say specifically exactly what will kind of go back to something more like the old normal, but I definitely think that the longer that we continue buying more of these things through digital channels, the greater the potential there is for those habits to stick, especially if the experience is good. One huge digital transformational shift that we saw was grocery shopping. And early on, when lots of people were saying, yeah, I tried digital grocery shopping for the first time, they weren't necessarily having that great of an experience with it, whether it was because they were having a hard time getting a delivery time, whether it was because like so much of the products they wanted were out of stock. It wasn't necessarily a great experience, and a lot of those folks said that they might not stick with it. As the situation has continued, I think that experience has improved a little bit, and people are more open to continuing to do their digital grocery shopping digitally rather than in person. I think that, one kind of meta answer to this question that I think is really important is I've seen multiple pieces of research where folks have been asked if they will continue to buy from new brands that they were sort of forced to try because their traditional brand was out of stock or not available, or if there was some kind of supply chain issue with the retailer that they usually use, they went to a different retailer and tried that for the first time. So it's definitely a time where there's been a disruption to people's routines and the opportunity for brands to win new customers who might continue to be loyal. More than a third of people who were surveyed by Kantar a couple of months ago said they were planning to continue to buy some of those new brands that they tried during this time period. And this is such a great example of what Melissa is talking about. As some advertisers have pulled out of Amazon, CPCs go way down. You have this ability to be opportunistic, maybe be the brand that someone tries when they're in a little bit of a sticky situation now, but if they have a good experience, they might stick with you.
Awesome. All right, well, you've got a little special thing for our listeners today. Do you want to tell people about your report?
Yeah, we're offering this report to folks who would like to give their information and download it. It's free. It's my most recent report on digital ad spending, which includes some of the information that I shared earlier, as well as more, and pretty complete explanation of what those June predictions were all about.
Awesome. Okay, well, thank you so much. Hopefully this has been helpful to the audience. I always love reading the eMarketer reports that Nicole puts out, because it has lots of great data to talk about what's happening in our industry, especially during such uncertain times that poor Nicole has to keep updating it, but keeps her in a job, job security, right?
No complaints about that these days.
That's right. So just a little programming note about our next webinar is going to be with Kane, which are two former Amazonians that used to run CPG creative at Amazon advertising. So they've got a lot of great things to say about how to think about creating your ad strategy in terms of a creative strategy for Amazon advertising. And with that, hope you all have a good rest of the week. Be sure to contact us at sales@pacvue.com to learn more, especially if you're looking at some DSP reporting. And then also feel free to download Nicole's report. If you can't remember, email us and we'll get that over to you. So thanks everyone. Really appreciate your time. Have a great rest of the week.